We're drawing to the close of Q1 2025, which has seen 7 UK-listed investment trusts hold shareholder votes on replacing their entire boards, which has been catapulted by an activist shareholder campaign to crack down on investment underperformance.
Let's talk about it. Welcome to ESG The City, your go-to podcast for all things ESG and sustainable finance. We're here to keep you informed and inspired as you navigate the evolving world of ESG and financial services, all in under 10 minutes. I'm Arwen, joined today by
Chris Green, Senior Consultant here at Novatus Global.
Today, we're covering an eventful ongoing saga that is shaking up the largest institutions within the financial sector, caused by Saba Capital. Chris, do you want to kick off?
No problem, happy to be here. Saba Capital Management is an American hedge fund with an AUM of roughly $4 billion. They've built up stakes in 7 UK investment trusts with the stated intention of improving performance and liquidity of those trusts. In order to achieve this, the firm revealed a raft of shareholder proposals for these trusts at the end of 2024. Namely, these proposals look to replace all of the trust's boards with only 2 Saba-appointed directors each. Some of the proposals also explored replacing fund managers, issuing tender offers, and transitioning some of the trusts into open-ended unit trusts.
Okay, it seems like a very bold and political move from them. What prompted these proposals?
A number of UK-listed investment trusts have struggled over recent years to outperform their index. In addition, their listed nature has also meant economic headwinds, such as higher interest rates, have resulted in their share prices noticeably trailing behind their own net asset value. Saba's proposals had intended to provide a strategic solution to these challenges, things like tender offers and transitioning to unit trusts to help support shareholders in avoiding the economic exit challenges that listed shares have. In the end anyway, all of Saba's proposals were turned down by shareholders overwhelmingly. On average, excluding Saba's own holdings, about 90% of shareholders rejected the proposals.
That's very interesting. Why do you think that was the result?
I think the result can be explained by looking at the list of questions investors should ask themselves before voting on the proposals. This list issued by the Association of Investment Companies. At a high level, not accounting for considerations for an investment strategy, from a governance perspective, 2 of the questions come to mind. The first, would you be comfortable with a board of just 2 directors? If Saba was successful, they were going to replace long-standing boards which had at least 4 members of varying backgrounds with only 2 members each, picked by Saba of course. In particular, considering the diversity of the proposed boards, of the proposed 7 boards of 2 people, only 1 had a woman, the rest were all men. The second question, would you be satisfied with the independence of the proposed new directors, given that Saba itself had stated its intention to be put forward as a potential manager of some of the trusts? There was certainly a concern around conflicts of interest. Saba typically held around 20 to 30% of each of the trusts, and I would imagine the other shareholders were concerned that the firm's more organised demands potentially overshadowed their own, potentially more fragmented concerns.
So what does this tell us? I think this is very much an ESG problem. From a governance perspective, this event raises important questions about board independence, shareholder influence, and the balance of power in investment trusts. The overwhelming rejection of Saba's proposals suggests that shareholders value strong, independent boards with diverse expertise rather than concentrated governance structures that may prioritize a single activist investor's agenda. The Financial Reporting Council's updated UK Corporate Governance Code reinforces the importance of diverse, independent boards and transparent shareholder engagement, and prompts discussions about how institutional investors balance short-term financial gains with sustainable long-term governance structures.
Thanks, Arwen. To add to that, the FRC's ongoing review of the Stewardship Code is particularly relevant here. The code, which sets principles for asset owners, managers, and service providers, emphasises the importance of effective stewardship and long-term value creation. This is a key area of debate because what constitutes as effective or good stewardship is defined by the methods of engagement between investors and companies, their respective roles in the investment chain, and particularly their investment approach. Should activism, like Saba's, be viewed as a legitimate push for better governance and shareholder value, or as a move that risks undermining broader stakeholder interests?
Saba's failed proposals highlight that UK shareholders are, at least for now, resisting aggressive restructuring efforts in favour of stable, experienced boards.
I don't think Saba's quite done yet. At the time of this recording, the firm has just announced 4 further proposals to review the fund's investment strategies and transition to an open-ended structure.
Definitely a story for another time, and we'll hope to bring you more food for thought as this transpires, but for now, we'll end this episode with a question. As governance expectations evolve, and with the stewardship code under review, will activist investors need to take a different approach to win shareholder support? Thanks for listening to ESG and the City. If you found today's episode engaging, be sure to like, share, and hit that subscribe button wherever you get your podcasts. Any questions or suggestions for further podcasts? Connect with us on LinkedIn at Novatus Global or reach out to us at esg@novatus.global. We'd love to hear from you. Here's Arwen
And Chris,
signing off for now. Sustainably yours, Novatus Global. This podcast is a 2025 production by Novatus Global, researched and written by Chris Green, and presented by Arwen and Chris Green. Video and audio production by Thibault Lacombe.